Numbers. Let's take a look at the clearance rates. What's happening at the moment?
Well, I think, when Tom said nothing's really changed and you're hearing the talk about the market slowing down, and I was chatting last week about this, there's no way it's slowing down. Clearance rates hit 78.5% nationally. Now, 3 weeks in a row it's been in the high 70s and at one stage hit 80. This time last year it was 60.6%. Now, every capital city is outperforming right now over this time last year, and every capital city. And some of the standouts like Brisbane at 48.5% clearance rate this week might not sound high, but for Brisbane that's very, very good. And Adelaide rocketed back up to 71.2%, but each and every capital city is performing better.
Now, to put it into perspective, though, it's not ridiculous, though, isn't it? Like, everyone keeps talking about this bubble and it's like property selling for a ridiculous amount, but I don't think it's stupid amounts, do you?
No, the market is really just correcting a little bit more than it should have by the stimulus of the lower interest rate. If that didn't kick in, we'd probably see a slightly flatter market. But when you look at the charts that I've been keeping, and I kept one, and you and I discussed it for a gentleman by the name of Leon in Brisbane a couple of weeks ago, you can see that Sydney went flat for a very long time, but it always had a massive distance between Melbourne and Brisbane. At one stage it did not, and it needed to correct, and that's what's happened.
Now, the big number, as well as clearance rates, is obviously homes advertised for sale.
Yeah, look, last week we reported a negative 2.51% over the week before, but this week it's plus 1.24%, which is really quite a big move considering winter and considering that the supply levels have been low. New Zealand itself went backwards. They had a bit of a climb, but from nationally their listings are down 1.1% over this time last year, but this time last week they dropped by 11.1%. Now, their interest rates went from 3.25 to 3.5 over a year ago, and they've just dropped back to 3.25, which is massive for New Zealand. So their rates are coming down, stock levels down, you think about it.
And very quickly, the rent price movements.
In Sydney, negative 0.14, Melbourne flatlined, Perth 0.4 negative. So overall, from every capital city, a 0.73 negative, but for the year to date, it's a negative 1.92%.
And finally, the vacancy rates
as
well.
1.69 Sydney, great spot. Melbourne 3.68, and of course Perth still high, 6.15, and overall of 3.84% for those three capital cities.
Wonderful. Sounds good. Well, Charles Tarbey, Century 21, thanks for joining us. Nathan Birch as well. And just a reminder, on your website is beinvested.com.au/empire for the free reports as well. Thanks for joining us this evening. Until next week, I'm Chris Gray. Good night.